Hey guys, this is Jon Rocha, owner and multifamily specialist for Prescott Realty. We're a local real estate firm out of Prescott, Arizona. And today I'm going to be sharing with you on this video my 2018 multifamily annual report. Now this is just simply a yearly review of what the multifamily market has done in hopes to just have some sort of decent projection for 2019. Whether gloom or amazing, that's what we're going to discuss today. Now, if you want a free copy of this report print it out, and if you're like me and you like to just kind of read it in front of you analog style, writing some notes, highlighting some things, you can get a absolutely free copy if you just go and visit prescottrealty.com/MF annual report. So if you're watching this video and it's past 2019 or we've already gone through 2019, that URL gets updated with the newest and most recent annual report. So if it's not the end of 2019 yet and beyond, you can still find the 2018 annual report. So let's just jump right into it. So the first thing we're going to look at, and I really like looking at the county stats. So this is just kind of a broad overview of what the stats and the data show us on a county level. Now, a lot of folks would like to see these at state level, and the only reason I don't do that is just because I think personally there's just too much variation between markets in a state that it's really not helpful to make sense of one specific market, and today we're looking at multifamily. So that's kind of my 2 cents of why I like looking and assessing the data at the county level. Now don't get me wrong, looking at economical stimulation, growth, jobs, rates, staying in front of the news for your state is a great idea. But when it comes to deciphering some of the data and the metrics that surround a market you're interested in, I would always recommend you start at the county level is a good place. So as you can see, compared to 2017, we can see very quickly here that the numbers look rather positive and good. So you can see total active there jumped up from 115 to 164. Sales volume, about 26 million, excuse me. And then, what I like to see too is that new listings jumped up almost double from 82. And that's always good to see because that's going to keep the prices at least at a reasonable level. Now, if we saw new listings jumping up only 10, then we would have seen more drastic changes in sold prices and volume because with low inventory, you're going to have prices be a lot higher. So, and in my opinion, I rather see a good, healthy amount of inventory to keep the market at least fair and moving, smoothly. If you see pending there, pending sales are still proportional to the new listings, so that's good. And solds also jumped up from 70 to 95. Average sold prices. Now, I'm a big believer in median sales prices, but our MLS data, for whatever reason, when you pull up county stats, doesn't give that. They just give us an average sold price. So I guess for the purposes of what we want it for, it gives us at least a good comparison. Not average days on market, but agent days on market. It went from 69.59, so obviously a little quicker now of properties going pending from when they go active on the MLS. And then the expireds there, we can see actually jumped up a tad bit from 2017 to 2018. And if I would take a wild guess, I'm going to say that it was most folks that were probably trying to get a little too greedy or ambitious on their price, and they just didn't end up selling. So all in all, county and Yavapai stats are looking good, in the green, and pretty darn healthy. Now, if we're going to an overview stats, this is kind of where we now look at a certain market. So this market is multifamily property in Prescott. And actually, you know what? Let me back up just a little bit just to add a little disclaimer here. When it's not specified on the slide, keep in mind that multifamily county stats means exactly that, 2+ units and up. So we're not segmenting for county stats necessarily from 2 to 4 units residential and 5+ commercial. And the reason why is just because, again, we just want to get a clear overview and an idea of how the county's doing relative to last year. So on this new slide here, we're looking at multifamily properties, 2+ units. That's just including commercial in the Prescott market. So now we're getting a little more segmented to see how each market is actually performing in 2018. And so again, overview. So we have 29 sold listings, new 45 listings, canceled 7, expired 5, and active in range. Active in range is literally just means how many active were in the range of the data, which was a whole year. So if we look at, for example, how many new ones hit the market, there was 45. So 7 of them carried over from 2017 to 2018 as active listings. So as you can see there on the last column, 87% of listings for all of last year were new listings. As folks actually putting their properties on the market. And as you can see on here, one of the biggest indicators to me that's just showing us how strong and how likely it is that the market is still holding is that second column from the right there, the sales price to original list price. Now, that in essence means that sellers are getting 100.33% of their asking price. So median sale prices is one thing, and seeing them go up is one thing, but the ability for a buyer to pay either right at what the seller is selling at or even a little above, like in this case, that to me is a golden metric to consider, because that just tells me that there's not even a typical 2 to 3% margin in there for negotiations. I mean, essentially sellers are coming onto the market and buyers are there to buy them, even at an uptick of what they're asking for. So that is a very, very strong signal in my opinion. Now, if we look at Prescott Valley, 2+ units, Prescott Valley, we can see on here, they have being 95 active listings in range. 86% of them were new, so fairly similar to the ones in Prescott, and 64 sold. And so, medium sales price is obviously a big difference here. So if I go back to Prescott's slide, we're at $410,000 for multifamily properties, and here in Prescott Valley, they dropped down to $280,750. And nothing wrong with that. Doesn't say those are two different markets. There's nothing to say bad about Prescott Valley. It's obviously just a more affordable or a lower priced market for you investors out there who are not playing with $400,000+, but maybe under $3. So nothing bad to say there, just different markets. The sales price to original list price here, as you can see, is down to that typical 2 to 3% or so is where it typically hovers between, what buyers are actually paying sellers once they hit the market. So this slide is super helpful, and I've had a lot of folks tell me that they love it because here it helps us break down per unit. So it's the building type. So obviously we know 2 to 3 to 4 unit properties as duplexes, triplexes, and quadplexes. I didn't put it on here that way just because our data, for whatever reason, spits it out by using units rather than those names for the properties. So anyways, so we're looking now at properties sold by number of units in Prescott last year. Or sorry, I should say 2018, because I don't know when you're watching this. But duplexes here, so biggest things to pay attention to, at least for me, is it's a very, very fast, accelerated seller's market. From that average days on market to 37, for 3 units is 57 under 2 months, 4 units 46, and 5+ 52. I mean, those are very strong seller market metrics. And so duplexes there are averaging about $340,000 for the building. And I like to always include their price per unit. So it's $170,000 per rental unit in that duplex. And the reason why I like putting that in there is just because in multifamily world, whether you're building apartments or duplexes, we're always from the construction side, we're always saying this unit's $150,000 per door. So instead of per door, I put per unit, but that's kind of helps you a little bit understand what you're paying for the rental unit itself, just to make it easier to calculate numbers for you. Triplexes, they're 407,000, 174 average sold price, and they're about 135,000 price per unit. And as you can see, that's a pretty drastic difference there, price per unit, as soon as you go into the triplex, because once you go actually to the quadplex, you'll see on there it actually creeps up a little higher than triplexes. So, and that's where the gold is in the stats for this this particular slide, is that duplexes in this area are doing really, really well as far as the price that investors are paying for them. And we don't have too many triplexes, quadplexes in the Prescott area. We have quite a bit of 2 units and commercial 5+ units. But see, now if we go over to the commercial 5+ units, we can see on there that price per unit drops down to 101,875. That's right about where I saw them hover at in 2018. Average sold price of these commercial 5+ unit apartment complex, which are most of the time that's what they are, averaging sold price 911,208. And again, average days on market, even for these commercial buildings, are still under the 2-month mark, which is pretty astonishing. So now looking at Prescott Valley, we can see on here we didn't have any commercial sold 5+ units and not in 2018, but it gives you an idea of what, if you're looking at price per unit. Now, granted, earlier in the slides you saw that our median prices in Prescott Valley were a lot lower than Prescott's, but when you actually compare price per unit here in these markets, they're not that far apart. I mean, 2 units here were 170 in Prescott. You're looking at 134,150 price per unit in Prescott Valley. And now obviously those duplexes are still about the same market speed at 51 days on market. And as soon as we jump over to triplexes in Prescott Valley, oddly enough, they do jump up quite a bit, almost to that 6-month mark of being on the market. And as you can see, though, in Prescott Valley, as far as sales volume, they moved 51 duplex units in 2018, which is pretty amazing compared to, I think, 8 or so in the Prescott market. So there's a lot of working middle class types of, demographically is what we're seeing a big influx there in Prescott Valley. And so it makes sense that a lot of those duplexes are being sold right now for good investments. So now we're going to look at 2018 versus 2017 at the Quad City level. So by Quad City, I mean, actually, this one's only half Prescott and Prescott Valley. So here it just compares us just very easily to look at graphs, just kind of get perspective. These show total active and total numbers sold compared to last year, or 2017, and also median sales prices, agent days on market. So obviously, if you're looking at that Prescott and Prescott Valley up top there, you can see total active have gone up substantially. Numbers sold has also gone up compared to last year, and median sales prices, agent days on market, as you can see on the bottom as well. I just like to include these graphs because some of us are also visuals and just kind of like to see in comparison what these numbers look like on a graph. So there you go. So here are the metrics that at least put now a percentage of growth, or change, I should say, for each market and by year. So if you can see if you're looking at the 2018, Prescott went up 57% on total active listings. They went up 81% on their numbers sold. And now, granted, again, this is multifamily from 2+ and on. So this is not actually broken up by 2 to 4 residential or commercial. Median sales price went up 10% from 2017 in Prescott, and then the days on market actually were dropped down by 49%. Now, so yeah, you can see on there it was almost 103 days in 2017 to get these properties sold in Prescott, and they dropped almost half. Prescott Valley, 41% growth in total active listings, 25% growth in numbers sold of listings. Median price in Prescott Valley actually held a little more conservatively at 2% increase. and days on market went up 21%. So obviously days on market going up means it's taking longer for those properties to sell off in Prescott Valley. And as you can see there, in 2017, Prescott's median sales prices, went from 370 to 410, and so that's 40,000 growth there. And then Prescott Valley, a little more conservative, 273, 612, went up to 280, just shy of 281,000. Now this looks at the Quad Cities, which in our area is Prescott, Prescott Valley, Chino Valley, and Dewey Humboldt. And all these charts are helping us decipher is what the sales volume looks like. And for this particular slide, it's actually how many new listings hit the market by the month, just to give us an idea of what those months are that are the most popular months of when folks are putting property on the market. So you can see on there 2017, 2018, March was a strong month, and if you ask me, it has a lot to do with taxes. That's what I've come to realize with my clients is that time comes around and people are definitely putting in property on the market to unload them, if you will, quote unquote, unload them before filing for taxes. You could also see November is a very strong month here in the markets for new listings. And again, that's very tax related in my opinion, because they're trying to put these properties up. And if you put, say, that 45 to 60 days on market, folks are trying to get properties unloaded or sold before the year end. So this gives you just a really good idea of those monthly new listings and when they come on. Now we're looking at sold listings. So these are showing us the number of sold listings by month. And so you can see July, there's a pretty strong correlation there between 2017, 2018, of July being a strong month for sales. December had a very high number of sales, which again, in my opinion, has a lot to do with taxes for the year. 21 units sold in 2018 is pretty incredible. It's 250% increase for 2018. So, and these are just helpful, again, just to break them up into months and see how it kind of ebbs and flows throughout the year. So now I think we're coming to an end here on the report, but we can't present a true multifamily annual review unless we look at what rental rates are. And so that's what we're going to look into right now. So the rent rates by bedroom. So this is the best metric I found is to actually see what tenants are paying per bedroom. I found that this is the most accurate way of actually segmenting what we're wanting to look for. I have included price per foot on here just for you price per foot nerds who like to calculate everything off that. That's a lot more common in residential world. Multifamily world, it's more about seeing what folks are actually paying for bedrooms. In my experience, I found this to be very valuable. So rent rates by bedrooms in Prescott. One bedroom's median sales price of about $825. And I need to change these slides because they're not sold prices, but they're rent prices. But you get it. So we had 8 sold, 1 bedrooms, and just keep this in mind that this is MLS data, not data from property managers. So a lot of the data in our markets are collected or at least accessible to property managers. It's very rare that we find most of rentals on the MLS. Most of the rentals are on Craigslist or on private websites by property managers or newspaper ads. So just keep in mind that the data is the best we can get. So when there's 8 rentals that went through 1 bedroom, that's not true of the entire market. That's just what went through the MLS this year, which still gives you, as far as price points and price per square foot and days on market, still gives you a very, very good gauge on the market regardless. So just keep that in mind. So the median sold price of what 1 bedrooms are going for is $825. Average sold price per foot, $122. Not bad. Average days on market, 21 days. So, and that's true of even what I felt in the market. I mean, rentals have been extremely tight, extremely competitive, and just landlords probably in the past 2 years have really enjoyed having, I guess, just so much of the power of picking their tenants and pushing up the rent. Now, the residential 2-bedroom, a lot more sold there, at least through the as far as the MLS is concerned. Median sold price or rent price there is $1,225. Average sold price per square foot or average rent price per square foot, I should say. I need to change that. Is $114. Still doing really well. And average days on market 29, just about in a month. I mean, that's literally what tenants are moving at right now is, getting out of a month at least and finding a place within the month is pretty typical here. 3 bedrooms, median rent price $1,800 a month, and that actually drops quite a bit in average price per square foot. That goes down to just over $1 there. But average days on market, again, still, they get 3 bedrooms are not as common on holding up the price. Obviously, numbers sold there, you can see it passes everything else. Those are typically detached single family homes that are kind of throughout Prescott. But you can see that the average sold price there doesn't get you as much. And then the residential 4+ bedrooms, so this is 4 and up. Those are, average rent price of $2,400, and they actually drop pretty substantially down to, 80 cents, 83 cents per foot. And that average days on market just creeps up a tad bit, but still under that 2-month mark. So about a month and a half, and you still are moving tenants fairly quickly. So now Prescott Valley we can look at here. Prescott Valley price per foot. Prices you'll see don't hold up as well as they do in Prescott. That's just differences in market and desirability. But 1 bedroom $650, compared to $825 there on Prescott's 1 bedroom, and about $114. Average days on market in Prescott Valley, as you can see, for 1 bedroom, 2 bedrooms, definitely move a lot faster. 2 bedrooms, median rent price of $915. And just already under $1 at 89 cents price per foot there for 2 bedrooms. And 3 bedrooms, median rent price $1,545, average sold price 97 cents per foot, and average days on market 30 days, just about a month. So as you can see, the biggest thing is just in sharing this is for you to see the difference in markets. I mean, these Prescott and Prescott Valley are 10 minutes away from each other. And it's just amazing to see the different types of metrics that come through, even in rent and what folks are paying in the different markets. It's quite astonishing. But as you can see, again, just like in the prior slides, the days on market, I mean, the inventory is being absorbed so quickly in the sales and in the rental side that the market's doing just extremely, extremely well, especially for all those sellers. And that's it. That's the wrap up of my 2018 multifamily annual report. I hope you enjoyed it. It's kind of a quick and dirty way to look at a year in review. And here are my projections for 2019 is that we're still going to see appreciation at very strong levels. We're going to see rental rates probably in the first half of the year. I would say they're still going to be very aggressive, very bullish. I definitely anticipate, based on what I see and read and feel, that rents should kind of start slowing down on the second part of 2019. With nothing that's cause for concern, but I definitely do think that based on wages and job growth, that there's going to be some equalizing in the market for those rents. Now on the sales side, I think we're going to see more of a slowdown later on, maybe beginning of 2020, because sales, quite frankly, are still being accelerated and stimulated by a lot of folks out in California in this market that are coming over here and buying, either using their self-directed IRAs or using a lot of 1031 exchanges to buy, 3 times the price of property in California, and then buying something out here for, 1/3 of what they're selling their stuff over there. So, sales will hold up a lot stronger for 2019, in my opinion. And we'll probably see that either start tapering off or maybe start equalizing and settling out a little bit in first quarter 2020. But rentals, I think, will still have a really good run for the first part of 2019. And maybe on the latter part of that year, we'll see some slowdown. All in all, if you're a seller, if you're an owner right now and you're having properties that might need some work, might need quite a bit of capital, might be too much of a headache for you, the money's definitely here. The buyers are definitely here, and it's definitely a time for you to consider to sell those properties off that you're just not too fond of, or that you're just, you can be happy with the return that they've rendered to you for X amount of years. So I will bring to you the 2019 multifamily annual report when the time has come. In the meantime, you can check out my multifamily owners group. So it's an exclusive private group that I hold where I share. I post two videos per month. So it's just bi-weekly, and these videos are just videos that help multifamily owners, investors, buyers make the most profitable decisions without the stress and uncertainty. So if you want to check out that group, go to PrescottRealty.com/joinmfowners, and that'll take you right up to the portal that would look like this. So once you land there, you just click request access now, punch in your information, and you will start receiving those bi-weekly videos with you in mind. I make those just for folks like you that want to make the best decisions as multifamily property owners. It's been great, and we will see you next time.